Welcome, everyone. We have an update from BioLargo Inc., trades on the OTCQB under the symbol BLGO. It's a clean tech and life sciences innovator and engineering services solution provider. Please welcome President and CEO, Dennis Calvert. Hey, Dennis, welcome.
Hey, thanks for having me back.
All right, floor is yours. Call me back when you're ready for questions.
Okay, awesome. At BioLargo, we make life better, focused on solutions for air, better water, better energy, better solutions. It's really critical. The strategy we pursue is to invent it, prove it, and partner it. We've got over 15 years of innovation going on here. And we're going to talk about the current status, give everybody an update. Remember the risk factors, of course. We're going to lean on safe harbor statements for forward-looking statements. And, of course, rely on our Q and our K for the most relevant, up-to-date information. Who are we? We're science and engineering folks focused on sustainable innovation to make life better. We focus on best in class, really important, best in class, best solutions, heavy engineering, focus on problems that don't have good solutions. We've got a whole portfolio. Again, as we mentioned just a second ago, we've been innovating for over 16 years. So at the parent company, the innovation engine is really the key spoke. We finance, we have engineering support for all these operating units, and we have an R&D team at the University of Alberta in Edmonton, over 15 years. Clyra is a great story. I can get bogged down here, but just to highlight, Clyra is preparing with international contracts with some big partners to launch product cleared through the FDA, long slugfest to get through the FDA, and now we're poised to do something dramatic. We have energy technology is the youngest in the portfolio, getting a significant amount of attention in the market. We're going to talk about that. The product Poof and our odor and VOC control through O&M and environmental, breaking revenue records. Frankly, will carry the whole company to profitability and beyond. Really significant commercial success. Took a long time, tested everyone's patience. It's a great story. Poof. This is Poof. We'll talk about it in a second. And then the equipment group's a new entity, but really focused on the innovations that have been long coming for the AOS and the AEC. PFAS is the hottest topic in the market for water, and we just secured our first customer. So we'll talk about that too. It's a big deal, and lots more coming. The revenue's been growing 100% year over year for quite some time. We think that'll continue, actually. Certainly into the end of this year, we're on the continued revenue track. It's a great time to take a look at the company. And of course, the numbers are getting more serious. And as they get more serious, we're generating increased support for the company, nearing cash flow positive. Of course, we're still doing some R&D. We'll talk about that. And we have some one-time expenses, non-recurring. We'll talk about that as well, important as you look forward. But the key here is that the baseline is pretty well covered. Most people think the company is de-risked. Its stability and many of the technologies are de-risked. And now it's about exploiting through partnerships and really growing the top line. And of course, heading towards the profit on the bottom line. Revenue net loss is essentially going down. Revenues are climbing. It's a great situation. SGA is relatively static, although this last quarter we did have a bump up. We're going to talk about specifics on that because we spent quite a bit of money building out a small manufacturing facility for our battery tech. And of course, the work at Clyra is expanding because they are focused on this global partnership and really preparing to launch in a significant way a series of products that are, as I mentioned before, cleared under the FDA, under 510K already. Our net cash used in operations has continued to mirror, of course, revenue, right? As we increase our revenue, we make more cash, a big deal. And of course, then ultimately our net shareholder equity is coming in around 3.82. It's a big deal. We'll remind everyone, people that have been here as shareholders, just 4 or 5 years ago, we started our engineering group, and we'd accumulated about $7 million in debt. So we've paid off all that debt. We have an SBA loan, 30-year, 3% money, and a little line of credit at Clyra, and that's it. And so we're in a really good cash position, and net shareholder equity is improving. And as we continue to move forward, we think it will continue to improve. So the highlights financially, we covered some of this before. This is right out of the queue. Revenue, of course, 85% quarter over quarter compared to last year. Well on track for at least 100% growth for the year over year, which is awesome. Because of R&D, these one-time expenses, non-recurring, $694,000 to R&D, and plus we had a significant expense associated with the build-out of our battery production facility, and I'm going to show you some images of that. And then the other thing to remember is because of the structure, we're able to bring in capital without diluting the parent. So we brought in about 1.5 million for Clyra, and in that asset, we currently own about 52 or 53%, plus the license of the technology. And it's a great way to leverage those innovations to create value. And of course, ultimately, Clyra is really positioned well for a spin out as these some of these relationships really take foothold. I like to say, if you like what Poof has done for the company, wait do you see what Clyra is going to do, because it's a big deal. And of course, products conceived well over 10 years ago. Really go back to the origin story of the company. It's a great story. Okay, so Poof, remind everybody, this is Poof. If you haven't seen the infomercial, you got to see it. They are just killing it. I mean, they're doing so well, and that's our partner. The company was founded by Ikigai Marketing Works. We did a business deal with them. We're the supply chain. We're the wholesaler. We're the inventor. They take product to market. We're continually innovating new products, so we'll get to see some of those soon. In about a year and a half, they have just really pushed dramatic numbers. Successful rollout at Walmart. Of course, Amazon is a significant revenue producer. They've got about 13 other national accounts. Their commitment to us, as they said, by the end of the year was to have well over 20,000 retail stores. They're well on track for that. We're watching the revenues continue to climb. It's great. That's about a 10-fold increase since June. And then there's some trail out on the logistics that occurs. But we're expecting those numbers to continue. And that's what they tell us. They believe those numbers will continue. Plus, we have additional products to roll out that are coming right from our portfolio into that selling and distribution channel under that great brand. And also, of course, under our industrial side, we're also witnessing growth, nothing like Poof, but really continuing to grow organically. We do have what we believe is the number one performing product in the marketplace, and we have now selling evidence to prove it. And as we say, the tide is rising and all ships rise at BioLargo, and Poof's a big part of that. Our partners are extraordinary at telling a story. They're masters at this craft, and as a result of that partnership, we're watching technology find a home and us making money. Right, so revenues are climbing, heading towards profitability, and profitability really will hinge upon our continued expense in R&D as we advance some of these technologies and they convert to commercialization. The PFAS solution is AEC, and I'm just going to highlight one little statement because we practice these words all the time to really explain a story. It works and it saves money, it works all kinds of water, but the biggest claim, and the biggest claim, is when you use a carbon system, you end up with about 80,000 pounds of waste. And when you use ours, it's about 2 pounds. Just want to make sure we highlight it. 80,000 pounds of waste versus 2 pounds of waste. The thesis is really simple. If you can super concentrate the contaminant, that's the forever chemicals that have been used to make nonstick coatings for the last 50 years. It's the number one environmental issue globally, estimated globally to be a $13 trillion market. We believe we have the number one solution in the world for collecting and then managing a waste stream that's now heading into designation as a hazmat. Can you imagine 80,000 pounds of hazmat material you have to dispose of? One of the lessons in remediation is don't trade one problem for another. That's what they're doing. When they use a carbon system, they're trading one problem for another. We believe that we do have our first account, and that'll be rolling out for installation soon. We've got a lot more detail we want to share soon, but it's pretty exciting, and more coming. There's a backlog that's pretty significant. The value proposition is compelling. This is the unit. I won't spend a lot of time on the detail of the science, but basically you create an electric field, you migrate the PFAS, collect it on a membrane like flypaper, and once you do that so efficiently, you can manage the disposal or destruction. We also have destruction technology, and we offer our customers a turnkey solution. Big question is, can you scale it, right? Well, this is a scaled system. The answer is yes, you can. You stack up the modules and you treat more water. So that's about 360 inches, by the way. So it's about 15 or 18 feet. This is the size unit to do about 1,000 gallons a minute. And as we mentioned, we do have our first project with a small community in New Jersey. And great situation as an early adopter. The client in this case is extraordinarily highly technically trained. And as a result of that, it was such an easy decision. And we were spec'd in, and all that activity is now beginning to move forward. Okay, the battery. We don't spend enough time talking about the battery tech, but we're going to. You know why? Because we just built a little production facility. We're going to have batteries in our hands ready for commerce as we come into Q3. It's really pretty simple. The world needs a better battery. what's happened in the marketplace as we go out to talk to people, the first, congratulations to Tesla. We're so thankful for what they've done. They've created a market. And now that their megawatt storage system called a megapack has about a 3-year backlog of orders, that means you can't get a megapack for about 3 years. There's such an incredible swell of demand that people are looking for long duration energy storage, long duration energy. We're not talking about batteries for EV cars. We're talking about batteries for buildings, batteries for EV charging stations, for backing up solar and renewable energy, and ultimately balancing the grid. Long duration, lasts a long time, handles energy. So 100% domestic supply, no rare earth, no runaway fire risk. It's safer, it lasts longer, and we're going to have a significant price advantage as well. Because when we enter that market with no lithium and all the issues that come with lithium, we're in a win spot. Okay, this is the first production machines that go in to produce our first production line. This has all just happened. We spent close to $1 million in the last quarter putting all this together, and we're experimenting now with each component. And remember, in this technology, there was 8 years of R&D. 8 years of R&D. We purchased a commercial-ready design. Now we're proving that by making commercial-ready batteries, and then we'll be heading into commerce in a blink. The excitement around this asset for the company is pretty extraordinary. It's in Oak Ridge, Tennessee. This is, of course, early scale. You can't make thousands of batteries here, but you can make hundreds, and you can actually make some money. But what it really does is it helps us prove the commercial viability and the concept of manufacturing, whether we're going to go outsource to contract manufacturing or build to scale. We're a company that people say, build it and they will come. We like for them to come and then we build it. And this is critical as you look at the company. Our focus is to build that distribution and selling channel before we take the risk associated with that kind of manufacturing risk. And then, of course, there's Clyra. We mentioned it. World-class technology, a disruptor in infection control, now negotiating with major global medical products partners. We're very optimistic and confident about the success of that. It's a long time coming, and we're hoping to get that into go mode here soon, hopefully Q1. And then there's a logistical thing that occur, but we're talking about partnering with some of the most important and best partner players in the marketplace. We do have some international presence. We have a joint venture in Daegu, South Korea. Great partnership, early in its development stage, slow and difficult, finding their way. Great people, great partner. And of course, our operations in North America are really busy. So this is a great time to know about BioLargo. The way to think about the company is mostly de-risked. We've got cash flow increasing because of the sales primarily of Poof and O&M. We've got capital projects coming to bear, evidence of our first PFAS, and many more, including our Garrett-Callahan partnership, well underway and underworks. And as those pan out, we'll lift up to significance in revenue as well as potential positive cash flow and profitability. And the business model, invent it, prove it, and partner it. Those partnerships take a long time to get started, but when they do, they can make a lot of money and they can do really well for the company and for the shareholders to build that massive sort of international national distribution. I expect this to go on for decades to come. It's been a long time getting here, and we appreciate everyone's patience, but we think it's going to pay off in spades. Okay, so let's open up for questions real quick. That was a quick update.
That was a great update. And Dennis, you kind of answered a lot of our viewers' questions, especially about the continued growth. We might have time for one quick question. Nick Rowe asks, have you done a spin out before? And if so, what would that structure look like?
That's a great question. We haven't actually done a spin out, but we have, of course, we have advisors and professionals to help us make sure we get it right. But the concept is pretty basic. That is, especially Clyra is a great example. We're an environmental company. It's our core story. It's our core competency. And then we have this medical company. And it's not to diminish Clyra. In fact, Clyra has the makings of $1 billion future, right, in revenue and value. I mean, it's huge, and it's also a very difficult barrier to entry. And so what we did is we created that company, recruited professional management advisors, and we slugged through the process to get through FDA clearance. So we have market-ready product. And of course, the claims that we've made at inception have come true, and we've proven it. It's a technical leap forward for that product. Now, what's it doing in BioLargo? Well, it was our company and it was our technology. And now, because we brought outside investors, we own about 53%. So what do you do with that? Well, it's a great public company play. It could spin out into its own public company. It could sell, it could license. There's many, many ways to monetize that asset. And if we were going to spin it out, my preference, my personal preference, of course, we'll deal with the board and all of our stockholders' interests, would be to retain some portion, because I think it has a chance to go into the billions. And if you believe that, you don't want to exit. You just want to get some return of capital, but you really want to share with your stockholders. So if you did that and you did a spin out like that, it'd be a tax-free dividend. So you dividend to all your stockholders. The parent company would likely hold on to a piece of the future because we love the company. We don't really want to leave it, but we do want to reward the people that have been so patient to watch us incubate and then see that monetize. So if that structure works, which it could easily, then our stockholders will receive a dividend in a new company that they didn't, quote, pay for. And that's a big deal. And so there's a lot of logistics in that. But you know what the key is? Make sure it's successful. When it's successful, you get all those options. And we're doing that with all of the companies by design. We've created corporate structure that allows us to make those kind of business deals to monetize assets for our stockholders. It's taken some time, but I can testify that the significance of each of them in the long run will prove worthy of our time and our patience and our investment. And so we're confident and bullish about that.
Great. Well, great update, Dennis. Thank you so much. We will send all of these questions to you because we do have a lot of questions for you, so you can answer on your own time. But this just means you got to come back in 2024 and give us some more positive updates like this.
Love to. We love it. Thank you very much.
All right. Thanks for your time. Okay, everyone, stay with us. We'll be right back.